Tim, great to see you again. Thanks for coming back.
Good to be here again. Always good to be here with RedChip. Enjoyed the interviews in the past. So let's go ahead and get started.
Medalist Diversified REIT, of course, is a Virginia-based real estate investment trust that specializes in acquiring, owning, and managing commercial real estate in the southeastern United States. Give us an overview of your business, Tim, and the customers you serve.
Yeah, I mean, our business is very it's a simple arbitrage business. All we're doing is buying really, really attractive properties in the southeast. We've focused on that area because we know the area well. We have investors in the southeast and around the country, actually international investors as well.
Tim, on Monday, November 15th of 2021, Medalist reported financial results for the third quarter, which of course ended on September 30th. Give us some of the highlights.
And I'm not going to go into the weeds on that, but I will say that two things. Net operating income was up 55%, and EBITDA had an increase of 58%. And if people want to have more details on the financials, they can go to our website where we have a supplement to the 10Q that we produced. And also the 10Q has a full a filing with the SEC as of last week.
Absolutely, Tim, and they can start at mdrrinfo.com, our landing page, where they can also be directed to your website. Medalist's board of directors authorized and the company declared a quarterly cash dividend of 2 cents. What are your expectations around future earnings growth?
Well, yeah, so we're buying these properties that are in the southeast that are cash flowing well. We sold one of the properties that was a cash flow drag, which was the Hampton Inn. That sold out in August, and we used that money to replace it with cash flowing properties where the pro forma shows cash flow above 10% from the outset. I can say this, that we are happy with the purchases that we made. We did net $1.7 million from selling the Hampton Inn, which is the subject property I just discussed.
Tim, Medalist recently purchased that Parkway project in Virginia Beach. How does that purchase build value for shareholders?
That's a great property, 66,000 square feet of flex industrial property. And for those who don't know what a flex industrial property is, basically it's a one-story business community where everyone in the community has a loading dock on the back. So you could have all warehouse, you could have all office, you could have half office, half warehouse. Ergo, the term flex industrial is served us well in the past. We've owned over 1.5 million square feet of it. We love that type of product.
Talk about your business model. How does Medalist make money?
Well, the business model is good. We're a diversified REIT. We don't focus on just one property type. We've owned hotels, we've owned multifamily, flex industrial, as well as neighborhood shopping centers. Multifamily is very, very tight right now, very expensive. And while we're not saying we would never buy another hotel, we're just not looking at hotels right now. We have one that's held for sale, which is the Clemson Hotel in Clemson, South Carolina, that's rented out to Clemson University currently. But that's up for sale as well. If we sell that at a price that we feel like we can achieve, that should free up $3 to $4 million in equity for us to invest in other good cash flowing properties.
Medalist Management has over 50 years of combined experience in commercial real estate and capital markets. Who are the key players on your team?
Well, the key players are Bill Elliott and myself. We started the company in 2003. We have Brent Wynn as our CFO currently. He's been with us since 2018, and he is helping to grow the business. He is a key player. Ben Orr is an assistant of Brent's. And behind us, behind the four people I just mentioned, we have Dotson Properties, which is 100 people full-time doing daily business for us. They're collecting the rents, making sure the maintenance gets done, etc. So we have a lot of backup, quality backup, as well as four key players on the REIT at this time.
To wrap up, Tim, give us the essential value proposition. Why should investors take an interest in Medalist today?
Well, look, you can invest in a lot of REITs. There's no question about it. We are creating really, really high cash flow in an area of the country where properties have a higher yield. So we are looking at properties that are now on a pro forma basis. So if you look at it on a 5-year pro forma basis, out of the gate, they're approximately a 10% cash flow on equity invested. In the last few months, we bought Lancer Center in Lancaster, South Carolina, 10% yield out of the gate. Greenbrier Business Park, which is a flex industrial property in Chesapeake, Virginia, 96,000 square feet. And we just purchased Parkway property in Virginia Beach, which is another flex industrial property, 66,000 square feet in size. Again, both of those properties are on a pro forma basis out of the gate, producing a 10% cash on cash return. We'll continue to look for those types of properties to purchase. And just to say, the Southeast really wasn't hit as hard as other areas of the country in the pandemic. Now, I'm not saying we never had any trouble with the pandemic. We did. The third quarter numbers that you can look at on the SEC website or at our website on medalistreit.com show that we have emerged from the pandemic, and our EBITDA is up, our net operating income is up, and we think that we'll continue to perform that way moving forward. So in the Southeast, with Medalist, you have a diversified portfolio. You have higher yields. You have cash flow that will continue to pump out dividends in the future, in our opinion. We believe that 2 cents a share is sustainable, and we would like to increase that over time. The current yield of where the price is trading right now is about a little over 7%. But you mentioned this earlier, that's going to change over time with the different pricing you see in the stock. But it's an attractive yield right now. The price is undervalued compared to where we believe the value of the portfolio is. And we'd like to see you invest with us.
It's an interesting story, Tim. Thank you again for being with us today.
Thanks for having me.